Friday, October 6th. Let's play taps because the jobs report just came out. Bond rates soaring. 10-year kind of fluctuating, but it started the day at about 4.7. It's now at 4.86. A few minutes ago, it was at 4.83. We are continuing to go up. Jobs report, crazy strong. One big thing that I want to point out, remember, I think it was back in August or maybe September, I listened to, and I said this and I agreed with this, what you're looking for the bottom of the market is when good news is good news. And so with the September employment numbers, they blew it away. 330,000 new jobs when I think it was expected like 200. It nearly doubled it. This is super, super bad. But good jobs numbers you would think is good. But remember, good news is bad. The reason good news is bad is because the market was pricing in no more rate increases. With a job market like this, most likely the Fed will have to raise in November. And another rate increase means higher for longer. Where are they going to stop? And the market is trying to price in or stoppage. Hold on one second. The market is trying to price in. My apologies, but for all the ASMR folks, yeah, you're welcome. But the market is trying to price in when the Fed, again, we talk about it all the time. There are sayings in the market. Don't fight the Fed is one of the biggest ones. 332,000 new jobs in September. August was adjusted, so from 190K to 270K. Absolute blowout. This means we're not seeing softness in the job market like the Fed has said, which will indicate the Fed has to raise. And again, I point out, the way you want to time this market, if you want to time the market, is when good news like this, and by the way, we're at 4.88 now instead of 4.86 on the 10-year. These are unprecedented moves in the bond market. The 10-year and the 2-year are starting to sync up. We saw the inversion. This weakens the market. People, and you're not seeing a huge rush of panic selling. The VIX, the volatility index, is only at 19. If you're long-term listeners of the podcast will know, last year we were playing the VIX at under 30, buy it, buy UVIXY. Over 30, sell UVIXY. And we can look at UVIXY right now, which is up, 10%? 7.98%. This one has all the confirmation in the world, UVIXY. It has been broken. We have gone down on the VIX for a very, very long time. But the VIX is at 19. That means there's no panic selling. The problem is there aren't buyers. Today with the VIX up 7%, now there's panic selling. This is now a problem. Bonds went crazy. The 2-year 10 inversion is at its lowest rate since it inverted. The 10-year went from 4.7 to 4.8 within a matter of minutes. Big move. Big move. So where are we going? That's I think why everybody tunes in here is the Gary guess. Where are we going? I was reading last night, and by the way, this is already outdated information. But last night, the Daily Rip, it's StockTwits newsletter. They said, we initially discussed traders and investors identifying a confluence of technical levels and indicators between the 410 and 420 range of the S&P. As we pointed out last time, not only is the market's May breakout level near 420, so is the volume-weighted average price near its 2022 highs and lows. As with buyers stepping in over the last few days, chatter is beginning to build that this could stem the recent 10% pullback. Yes. We saw the 10% pullback. We're pulling back. We talked about it. This is from this point, July, all the way back here, we're at 10%. Here, let's look at it. I show that 7% because that's when I put that in there. But today, if you just look at it, we're down here at 420. What does that do? It's about 9%, 9.4, 9.5. That's where you're looking at, 9.4, 9.5. This 420 mark right here, in pre-market, you're trading at 420.18. You're going to break that 420 mark. And if we look at a long term, let's just look at a weekly. Because if we look at a weekly, we can show that 2022 low or 2023, the breakout right here. It was, this is March, this is May, and that's the 420 breakout right there. That's what they're showing right there, the 420 breakout. You can look at February, the other times we were at 420. Here, May 2022, we were at 408. We went down in June. Then you came up here. This was the high in August 2022, and you broke down there. So 420, we'll just put a line at 420, let's say. We'll go to 420. That's 420. We'll go, yeah, that's 420. So if you want to see where the support is, that's 420. So when we dip below here, again, the 50-day, this is a weekly, so the moving averages are not going to move very quickly. But the 50-day is still moving positive. We're just pulling back. That's it. If you want to know where we started the year at, I mean, this right here is October, then December. This is where we started the year at. We're still moving up. I mean, we're down below the trend line. We're absolutely below that trend line right there. Here, I'll remove this one so we can remove this one. That's the trend line. See, it hits at least 3. And so you're below that trend line. But I would expect us, do you want to start buying? In my mind, I don't think 420 is a bad place to start buying. But could we come down? We could come down to the 200-day at 392. Look, it happened in October of last year. We came down to the 200-day. So if we're looking at coming down to that 200-day, and, you know, see the MACD still crossing down. We're not completely oversold. But if we're looking at coming down to that 200-day, let's see. If we just say, okay, 420 is our best case, and we look down and we come down to that 200-day, you still got 6% down. You still have 6% down. That's not crazy to think that we could get down there. It's only 6%. And where did we start the year? 376. So you're pulling back, and what would lead us there? The grade 8. Grade 8, Magnificent 7, whatever you want to call them, Apple, Amazon, Google, Meta. They've been Meta or Microsoft is down at 315. If this one gets below 300, load up. Just load up on it. See how it's kind of capitulating around here? It doesn't want to go down more. So my point on this is bonds are going crazy. Stocks don't have buyers. We need to wait until we get some confirmation in this market. So, but doesn't mean that there's not opportunity here. Here, look at this one. SPY Madness. Magnificent 7 is up an average 95% year to date, while the average stock is down. This is a great example. Take a look at this article. I'll include this article in the newsletter. Big tech is overdue for a big correction. This guy is pointing out it's overdue for a big correction. Well, when big tech takes a leg down, guess what else takes a leg down? The entire stock market. So you're gonna get dragged down by this. That's a good example. In fact, I'm looking at some comments from the past couple of days. Fatima Ben Sharif. Let's agree we're in a bearish market. Many of the, if not most stocks, especially in the Magnificent 7, will go down 20% in the near term. A very possible scenario coming for the next couple of months. I don't know that it's the next couple of months. My guess is that we're probably in this stale period. You're in a weak October period. I do believe we end the year higher than we are today. I continue to say that. We end the year higher than where we are today. I think that continues to be my base case. I am not selling. I am not trimming down here. The reason I haven't changed the core portfolio, I don't think you do anything in times like this. I think you stick with the names that you have, and I think you wait for times to actually react. You know, for instance, Coke coming out of the core portfolio. I want to get it out of the core portfolio. We've ridden this from 60 down to 58. quite a bit. If you've got a large position in Coke thinking that $60 was your price target and you bought it 58 or 57 thinking, oh, I'm going to get a nice bounce up here to 60 at some point, you probably will. The problem with Coke is that the strong dollar, their currency, they're going to announce here October 23rd, and they'll probably get hit by the strong dollar with some currency stuff. Traditionally, companies don't get a lot of flack for conversion stuff, but the dollar is just so strong against other currencies. Goldman Sachs, we talked about it a lot, 308. Maybe you bought up here at 330 thinking that, oh, I've got confirmation, I can continue to go. And then all of a sudden you come down here because the economy's weak. Goldman Sachs, their book value, if we go over to FinViz and we look at Goldman Sachs, their book value is $319, and you're getting it at $310. So if they took all of their assets and sold them off, you as a shareholder would get $319. It would take quite a while, but yeah, you've just got to make sure that the companies that you're buying are solid companies. Even Meta laying off people in the metaverse, they're going to announce October 25th. I have an article here, Meta poised for AI tipping point. This is all about how Meta is going to monetize their WhatsApp, Instagram, Facebook. All of that stuff will get monetized with AI. So they're at a tipping point. Barclays, $410 price target. So, again, my point on this is, don't freak out. You're going to lose a lot of money, probably in your whole portfolio. You can trim some of this stuff if you'd like. My likeness on this is, hey, am I selling Netflix at $368? Hell no, I'm not selling Netflix at $368. Look at Netflix. Netflix password sharing crackdown would unlock shareholder value. This dude's got, Netflix fair value hovers around $500, implying a 33% upside. I take him for his word. I like that one. I read this whole article. I'll include this article in the newsletter as well. Again, find good companies and put them in your portfolio. Here, SMCI and NVDA yesterday, up. We talk about SMCI all the time. I've got my position in SMCI. I bought it. I put it in the newsletter. I like this algorithm. My algorithm put it here. 9 days, 17%. We're at 287 right now. This is down 2%. It's at 280 in the pre-market. I like it to fill this gap all the way up here to 350. I think this one's a good one. If we look at NVIDIA, NVIDIA's riding the 200-day. Look, the worst case scenario, you're coming back down to 424 from 446. But continue to add to your position as you feel comfortable. At 446, I sold at 505, 510. So, the point being, and this one, while I think it's crazy, they're going to have, NVIDIA's going to have, I don't know when their day is. They're going to have a technology day or a product announcement or something. NVIDIA, by the way, today, 3 cloud stocks to buy in October. So read this stuff, but their average price target is $654. And that's not crazy to think that they'll get it, $654. But, again, I have this line here as 377 as a support. It hasn't even come down there. It's been using this 200-day. I don't think this is crazy valuation. We can look at NVIDIA, or, before we look at one, let's look at Rivian. Because Rivian yesterday, they announced that they were doing some convertible bonds, blah, 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 basically diluting some shareholders. They're losing $30,000 per vehicle. Rivian, I know Scott said he bought it. This one just broke through the 200-day. In my mind, I still say this is a $30 stock at some point in time. People won't remember about the $10 million in notes. They raised a little bit of money. Big deal. It's coming back down there. It's broken its 200-day. It might fill this gap to 1677. That's, in my mind, that's the next target. If it breaks that one down, then you're probably going back down here to 1566. But add to your position. Yeah, they're losing $30,000 per vehicle. This company ain't going out of business. You're not going to zero on this company. Do you have to hold it for a hell of a long time? Probably, because it is super, super expensive. Price to sales 5.80. We can look at auto manufacturers. Let's look at auto manufacturers, and they don't even have a PE. But look at the auto manufacturers. I mean, their PE is super, super low. Look, Stellantis 2, General Motors 4. They don't put Tesla in here. Tesla is here. 73. 150 is Lee. So, race Ferrari at 48. So you want to be, my point being, you want to be careful about what you buy. There were a couple yesterday that really went nuts. Boyle, I said it's a $70 stock. I continue to think that. It's a triple levered ETF on natural gas. I don't particularly buy this one. I like to play it every now and then. But in this market, am I playing with money while it's getting 5% in just as cash? No. I mean, I'm super, super careful with this one. Natural gas is one that just was too low heading into winter. It's up at $64 right now in pre-market. It'll be at 70. It'll get back up to 70 from 64. Don't be greedy with it. If you've got profits and you bought down here at 53, don't be greedy. Take some profits. You can always buy in more if you want, but don't be greedy. You know why? Because the inverse of oil, SCO, has all the momentum. So oil is coming crashing down. SCO is up to 19. If you bought it here on the algorithm at 16, you're at 19. I mean, you probably came back down to 16 after you were at 16, 17, and then you just shot up. You're not even at the 200-day on SCO. Now, remember, these don't play on moving averages a lot. You do want to wait for confirmation. I would not trade this on a 4-hour. I would trade this more on a 5-minute. If you're actively trading these triple levered ETFs, I go on a smaller time frame. The reason is you don't want to be greedy with these. Yeah, you can get 10%. Yeah, you can get 5%. But 1% gain is a 1% gain. 2% gain is a 2% gain. Use these so that you're trading the momentum. SCO Boyle, I like it. One that I really, really like, and I've been pounding the table on as it got close, was Pioneer Natural Resources. Boom, headline. Exxon close to buying Pioneer Natural for about $60 billion. I say it's a $250 stock. That's what they're rumored to be paying. You know where PXD is right now? Let's see. PXD, you could buy it right now. It's at $236. It's going to be a $250 stock when they actually buy this thing. And you know what? If you bought it today, even at $236, I'm going to add more to this one on a shorter time frame because October 26th is their earnings. With oil this high, they're going to basically be producing, giving you a special dividend. It's going to be a huge dividend. So I like that one. Tesla is down. It was down quite a bit. It's down almost 3% at 250. We talked about 250 being that price point. You're going to have a chance to buy it at 250 today. They reduced their prices again, $2,000 on the Model Y. Not on the single motor version, just on the dual motor and the Model 3s. $2,000 here in the U.S. You know why? Because they expect some demand issues. That's going to be the problem. As the consumer becomes weaker with less money to spend, there's going to be places that they're going to get hurt, specifically big ticket items, and that's cars. As long as you value this as a car company, I value it as an energy company. But as long as you value this as a car company, this one is probably the best car company that's positioned out there. No auto unions, 100% American-made cars that are here in America, between Texas and California. It is the most American-made car. So you want to be careful on that one. One that I like as well, PayPal. And here's an article that I'll include in the newsletter as well. PayPal, Wall Street got this one right. The stock trades around 12 times forward earnings, forward PE. Here's his thesis, kind of, near term, long term, puts it out there. He thinks this one There are several other risks, both on the downside and upside directions, with the worth mentioning uncertain macroeconomic and geopolitical combined with operational challenges. Blah, blah, blah. On the positive side, it's buy now, pay later feature and Venmo are gaining traction. All told, I see positive easily outweighs the negative. The gist of my bull thesis is that a catalyst rich stock for a sale at a cheap valuation. As a result, again, this is a new CEO. I mean, he goes into all of that. I'm sitting there. I'm holding PayPal. Where am I adding more PayPal? When they have confirmation. So PayPal, I think we just got to buy recently on this one. Yeah, 58.62. You're 57.50. But we haven't gained confirmation. It's been hovering around that 9-day, continuing on the downside. Not buying it, not adding to it until we get confirmation. So, again, I'm waiting for that one. I like that one there. NVIDIA, I don't know if we talked about it, but NVIDIA, OpenAI mulls making their own AI chips. This could include NVIDIA, could include AMD. Microsoft is the backing of this one. But whoever does it, I can bet you that Intel with their fabrication is going to be included, or Taiwan Semi is going to be included, one or the other. So if you want to, invest, if you're afraid of NVIDIA specifically with their chips, go and invest in Intel and Taiwan Semi. Both of those are great stocks. We talked about Meta. We talked about Netflix. Let's talk about the scans now. Because, again, this job number just puts it into perspective. It's a Friday. Guys, on Fridays, we don't do a shit ton of a lot of buying. I mean, just Fridays in general. I think this opportunity right now, the question is, does the VIX provide you an opportunity at 19? I mean, let's go and update the VIX. Let's look at this one. Is it still at 19? At 1929 is the VIX, 19.29. You're coming off of ranges here that were in the 13 level, September 17th. So this is just, this is a 1-year chart of the VIX. Look, we've come down. There are no buyers showing up. It's not panic selling. So let's talk about some scans now. If you wanted to buy for long term, and again, these are kind of long term. There is some short term, like a triple levered ETF, DPST. Johnson & Johnson, this is a mainstay. I think Johnson & Johnson, you're seeing the button hook right here. It's a $160 stock. You get dividends, compounded interest. It's a safe place. This is healthcare. If we're going into a recession, you can see it's come down from about 172 in the August kind of time frame highs right there. But long term, this is just a solid stock. This is why I have it in the core portfolio. Now, if we go, I'll go over here because I do want to show you this. One of the things that I've been doing when I evaluate core portfolio stocks is I just evaluate it against VOO. And I say, you know what? Let's go VOO and we'll update chart. And what we'll do is we'll select the metric and we'll say performance. And I change it to total return because both VOO and J&J have dividends. So I want both to be included in the performance of the chart. And in 1 year, you can see VOO is greatly outperforming. 3 year, VOO is doubling what J&J is doing. 5 year, VOO is doubling what J&J is doing. 10 year, VOO is doubling what J&J is doing. I think J&J is just a healthcare safety place to be to provide you some results. It's not outbeating VOO. It's not like VOO has a ton of volatility to it, but J&J has solid earnings that are going to be there, and it's just it's 50% of the risk of VOO. That's the way I view that one. UNH, United Healthcare. I've held 500 is the price target. UNH is at 514 right now, right before their earnings. Typically, this one is running into earnings a little bit hot. This was unusual last time where it kind of sank, but then it popped. So when you're running hot into earnings, I don't necessarily like to buy. I continue to think that 500 is the target on this one. I think UNH in particular has some headwinds with the administration not necessarily liking healthcare insurers. So Eli Lilly, we talked about it. This one at 542. With the healthcare, the weight loss drugs, $542, I don't think is a horrible price. If we look at this one from a long-term perspective, I think this one is greatly overbought. The pullback is justified. I think you could probably wait for this one, but don't wait too long. I mean, again, if these guys have a crazy good weight loss drug, I think that's a good one. Disney. We've had a couple cross-ups on Disney here, getting in and out. I would not look at this one. And the reason I put it in there is because a lot of people signed up for TrendSpider, and you might be saying, oh, Disney got to buy in the algorithm. The algorithm loses you 17% on Disney. If you bought this 2 years ago, you're down 55%. The valuation on Disney is just crazy for right now. Because if the consumer is becoming weaker, a 65 PE is crazy. Just crazy. Their debt is killing them. They're down 7% this year. They are 2% off their 52-week low of 78. If you can get this in the 70s, I think you're okay for long term. I just get concerned about their debt. They're going to have to start selling assets in order to cover that debt. But VOO, we have a cross up on 300 at 388. You're at 387 right now in pre-market. If you want, VOO is one of those buy and forget it. So I don't think that this is one that you trade, even though you can see there's upside on VOO. You just don't trade this one. From a weekly standpoint, you can see we haven't even pulled back to the 200-day, which we talked about with SPY. But 360 is the 200-day on the long term. When you get to the 200-day, the only other times that you've gotten to the 200-day was the October lows and COVID. And this was 2018 when you got down there. So I want you to be very careful when buying this one. But if you want to add to VOO, continue to dollar cost average your way in there for the life. DRN, this is a triple levered real estate. This is a bull triple levered. $6.31. You're trading at $6.25. We closed at $6.43. Does not have confirmation. It's a Friday. Keep an eye on it. Has the real estate market come down enough? You can buy this. Ironically, XLRE. This is the spider sector. This is not a triple levered. This is just a single levered real estate ETF. It's a spider one. It got a cross up here at 33.24. You're at 33.19. If you think the real estate market has pulled back enough, this might be one that you want to look into. You're below the 200-day even on the weekly. But with mortgage prices the way that they are, people not being able to afford houses, that's kind of a little bit of a risk. Now, XLV, we talked about healthcare being a safety. People have been flocking to it. It's recently gotten weak, 128.69. There really isn't a lot of safety in this market. You can see from a weekly standpoint, this one's still fairly strong. We're down below the 50-day. You're not quite at the 200-day, but that's only $7. XLV has been kind of trading in this range right here. One that has been a catalyst. Well, you know what? Let's do this one first. DPST. This is the 3 times bull levered regional banks. Now, regional banks are getting killed with higher for longer. They hold high cost, low yield bonds at this point. So the bonds that were 1% and 2% of the years past, those are essentially worthless. So the Fed is buying these back at reduced rates and giving them higher yielding so that they can continue to pay dividends to customers. This is where this one gets hurt. Where are you going back to? Are you coming back down here to the 30s where you were during the Silicon Valley Bank? I don't think so. I think you've put in a floor here at about $45 to $50. So if you wanted to buy this, remember, it's a triple levered ETF, so it's a decaying ETF. This one is not a long-term investment. This is a short-term investment, DPST. IBM crossed up. I like this one. Solid play. It's flat on today, 141.52, kind of where it closed. Boring tech. But the MACD is down. The RSI is at 41. Their earnings are coming up next week or the week after, October 18th. IBM crossed up. One that I took off the core portfolio, but doesn't mean you can't trade if you don't want to. Merck. Merck has been killed. I'm not a big fan of Merck. It has run up. I think I had it on the core portfolio, but I took it off. But it's just run up too much. I think you're still probably got a little bit ways down there. I think you might come down to this 200-day to 87. It's just, I'm not a fan. MasterCard. We talked about Visa having a bunch of cross up. MasterCard, same thing. MasterCard's back to its 200-day on the 4-hour. We can look at it daily just to see where the market kind of looks at it from a standpoint. It hasn't gotten to its 200-day. So this gap down here, 327, I don't think that's in play. I think MasterCard just prints money. One that got a cross up is Southern Company. Utilities have gotten killed in recent days. Absolutely killed. We talked about this utilities yesterday. We talked about utilities being a possible buy just because they've gotten killed so much. 64.60. Do you want to buy this one? Wait for it to get to the 200-day? The problem is people are exiting utilities because bond rates are coming up. So bond rates are cheaper. Utilities are in trouble. BlackRock. This is a real estate play. 638.26. This is up at 640 in the pre-market. Has it been hurt enough? When you look at the long term, it's at its 200-day. It's below its 200-day. The only other times that BlackRock has been below its 200-day, 2018, then COVID, and then the 2022 lows. So you've just kind of floundered here. The highs on this one are $950. This is a solid company. So BlackRock is there. USB, Brian asked me to look at USB, I think, in the Facebook group a few days ago, and I forgot to put it in my notes. My apologies, Brian. But US Bank Corp, 3188 is the cross up here. Again, it's banking. Banking's tough because you're just heading into headwinds. You're fighting a battle that may just get lost if the Fed continues rate, and you've got that death cross there. The MACD is below. The RSI is kind of rising, but the stock is falling. So when the RSI is rising, but the stock is actually falling, I'd just stay away from it. Doesn't mean that you may not get up to 39 or even 34, which is where the 200-day is at. But with that death cross, I'd probably find a better opportunity. So I again, Netflix, Meta, NVIDIA, PayPal, PXD, SMCI, Boiler SCO, SPY. I know we talked about PFIE yesterday in the YouTube live. PFIE. It is when you go over here to let's see, top stocks. We're going to do top stocks. And when you go to we talk about quant ratings on Seeking Alpha a lot. And PFIE is one that I think Christian said he bought. Profire Energy. It auto-corrected. PFIE, Profire Energy. It's a 4 on Seeking Analyst. It's a 4.5 on Wall Street. 4.99 on the quant. Now, it's crazy. The chart is nuts. This is a energy company that, again, it has been hit hard with energy, and energy has come down. But you're seeing it here. Look at this candle. I mean, that's an 18% in yesterday morning. 18% candle period. The high was $2.33. The low was $1.86. Now, in the afternoon, it was only a 0.86. The high was 241. The low was 229. You're trading at 236 right now. It's a small cap, super small cap. We can go PFIE so that everybody can look in FinViz. The PE is 13, so it's high for an energy company. It's only got a market cap of $112 million. It's got 107 employees. They're returning share to capital shareholders. Target price is $217. But take that target price with a grain of salt because we looked. Nobody's covered this since 2019. There's no real insider trading. They've exercised options. Nobody's really done anything. But PFIE, I think it's if you look at that volume, just since the last earnings, that volume, I mean, it's been hyped. That volume is hype. Could the hype come back? Well, you're seeing some spikes here. Ever since it looks like it took off here from a retail trading at about $1.67, you doubled. So this is the kind of stuff that you want to see. And I know there's screeners, I think, in Seeking Alpha that you can look for stuff like this. But PFIE, energy name, I don't. The question was, is it going back to 3 or is it going to 1? On this chart, I'd say it's likely to go back to 3. Doesn't have confirmation above that 9-day, but that's a violent move down. And it's just come back to realize, ooh, maybe I should be at 3. So the MACD hasn't crossed up. It's still down, but Christian says he thinks it's going to 1. The question is, really, are these guys going to get bought by somebody? And that's why he was holding on to it for a while, he said. So that's all my notes. Yeah, we had a shitty jobs number, which was a great jobs number if you're in the employment world, if you want a job. So, yeah, I'll be doing my paid newsletter. If you're not signed up for the newsletter, dailystockpick.substack.com is the newsletter. It's free. Just sign up for it. If you want to see any of all of my links, they're here. linktr.ee/dailystockpick, linktree/dailystockpick. You can get TrendSpider. All the charts that I show, they're in TrendSpider. Get my 4-hour algorithm special offer on the link right here up top. You can get Seeking Alpha. Most of the articles that I just went over are on Seeking Alpha. It's $189 with the $50 off coupon. I love it. I've been using it now for a couple of weeks. I find it invaluable to get the morning pre-market summary. This is what I like. Seeing my top losers in the trading portfolio and the core portfolio. I like both of those. I get basically a pre-market portfolio digest for each one, both the trading and the core portfolio. So in fact, that is the pre-market. This is the core portfolio. Eli Lilly was up, Disney was up, NVIDIA was up. And I got to put the rating downgrades, upgrades, Disney hold to buy. This is quant ratings. Rating downgrades, Microsoft buy to hold. So Microsoft eyes Activision deal closing next Friday. Activision Blizzard, by the way. Remember, that deal is at $95. So it's trading right now at $94. So you could get $1 if you wanted to buy it because it's closing at $95. You'll get $95 per share if it closes next Friday. But they're seeing that it does. But I do like the pre-market summaries as they're sent out on Seeking Alpha. Third one is Webull. If you have Robinhood, just switch over to Webull. I mean, that, in honest to God, it's the best platform. If you're switching from TD or Ameritrade because you don't like what Schwab is doing, get Webull. Webull's got the best app. Webull app is so much better than Fidelity. I like navigating Fidelity because I know where stuff is a little bit easier. But the Webull stock, buying and selling, it's just so much easier on Webull through the app. There's the newsletter. If you're paying anything more than $25 a month for your phone service, go over to Visible, check out the plans, use that link because that link saves you $20 off your first month of service. And I have this $25 a month plan. So my savings on the first month, $5. $5 a month was great. And I like this. Use code 35 for 6. No, you don't need to use 35 for 6. Using my code saves you $20 off the first month. But yeah, if you want a Tesla, this one gets you referral, saves you $500, and you get here. Let's order now. Look at the Model Y. I mean, the Model Y best crossover car, highest selling crossover car. Gary's referral applied. You can apply that. Look at Model Y long range, $37,000. Model Y, just the rear wheel drive, $32,000. And that price assumes the $75 IRA. What is it? Inflation Reduction Act, federal tax credit. So $32,000 for a brand new Model Y. Crazy. You can look at the purchase price without any of the incentives. So, $500 $43,000 is the actual price. So if you want any of that, it's on Linktree. All the other stuff, Savvy Trader, YouTube, Daily Stock Picks, Spotify, Venmo, Cash, blah, blah, blah. Okay, I'm out. Enjoy the theme song. See you guys. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.